Investing in stocks is actually pretty risky. And then there are mutual funds where the risk is less but the commissions are too high. I wish we had an option where the risk was less and the commissions were less but the return was really high. And yes, we have an option like that. And we call it ETF, Exchange Traded Funds. In this video, I'm going to share 3 ETFs with you that are actually my favorites, and they have a huge potential to grow in the next 5 years. And they will definitely make you your first crore, and if you're already there, maybe your second or third crore. And watch this video till the end because I'm going to reveal my favorite ETF in the end, the bonus ETF, where I've invested a lot of money. In fact, I've broken all my investing rules for this ETF, and I've invested close to 65 lakhs just in this ETF. So stay tuned for that. Let's start with what are ETFs, and let me oversimplify it for you. Suppose you want to buy chocolates and you went to a shop where there are huge chocolates. Let's say each chocolate is of size 1 kg. And now if you buy this one single chocolate, the risk is too high. What if you take it back home and then nobody likes this chocolate? And then suddenly in this shop you also see a box of chocolate, which is an assorted chocolate box which contains small pieces of these huge chocolates, and they're like 30 different chocolate in the same box. Now this actually reduces your risk a lot, because if someone does not like one of the chocolates, you still have almost like 15-20 more options. And this is exactly what ETF is. All the chocolates inside this box, these are actually stocks, and the complete box is actually an ETF. So ETF is actually a collection of stocks. Now you'll say this is very similar to mutual funds, and yes, they actually are. They are very similar to index funds. The difference here is ETFs trade all day long on an exchange, which basically means you can buy or sell ETF from like 9:15 AM till like 3:30 whole day long. You can just trade them just like stocks. You can actually go to Kite right now, Kite by Zerodha or Grow or whatever trading platform you use, and you can search for these ETFs and you will find them, and you can trade them all day long. But in index funds, the NAV is set just once every day. So you'll have to, you'll have to just choose it once a day and then you can't trade it. Plus ETFs also have very less expense ratio, which makes it even more attractive. So they even less commissions and the returns are really high. This basically means if I share 3 ETFs with you in this video and you invest in them, that basically means you're investing in almost 50 to 100 stocks. That reduces your risk drastically. So let's start. Now the first ETF I want to talk about is this Grow Nifty EV and New Age Automotive ETF. This ETF basically invests in all the companies that belong to EV space. And why should we invest in this ETF? And I'll show you the major reason for this. Look at this news. Indian EV market projected to grow at over 40% CAGR till 2027. Do you know what this means? If the EV market grows at this rate, which is like 40%, what do you think will happen to the stocks that belong to this segment? Naturally, they will also grow at this pace. In fact, more than this. Now, if you try to pick the stocks yourself, let's say you pick 1 or 2 EV stock yourself, there's a really high risk. Those companies might crash. The other companies might do more innovation and they could just kill those companies. If you invest in this ETF contains 34 companies that belong to this EV segment. So even if 1 or 2 companies crashes, you are still covered. If you talk about the past performance, stocks in the EV space have given almost 300% return in the last 1-2 years. And if you want to talk about the future performance, I expect at least 20 to 30% return year on year for the next 5 years, which basically means your wealth will get 4x if you invest in this ETF. So maybe you can do your research, and if you like it, you can invest in this ETF. Now, the second ETF that we have on our list is this Edelweiss MSCI India Domestic and World Healthcare 45 Index ETF. Now, healthcare is the sector that never goes out of style. It never goes in recession. In fact, COVID taught us a really important lesson, that our healthcare needs massive investments. Actually massive investments. We had a lot of trouble when COVID happened, and we really need to invest a lot of money in healthcare so that if this kind of problem happens in future, we are covered. And we are actually doing something about it. I'll show you a piece of news that will give you more confidence. Look at this. Globally, the healthcare sector is of $10 trillion. The Indian healthcare sector accounts for about $372 billion and is growing at a CAGR of 22%. Yes, it is growing at a CAGR of 22%, which basically means all the companies that belong to the healthcare sector in India will also grow at this pace, and globally it is even more. Now, what makes this ETF attractive? Two major reasons actually. A, this ETF not only invests in India, it also invests in leading healthcare companies in the US, which actually gives you a really good diversification, a global level diversification. That's one. And the second important point is it also invests in healthcare subsectors like biotechnology, pharma, medical equipments, etc., which basically means your risk is also drastically reduced and you can expect a really high return if you invest in this ETF. Historically, it has given almost 15 to 20% year on year. I expect this to give us a return of at least 20 to 25% in the next 5 years. So you can consider investing in it. Do your own research before you make your investment. Now, the third ETF on our list is HDFC Nifty Private Bank ETF. And I am specifically recommending Private Bank ETF. And here is the reason. If you look at PNB, SBI, all the PSUs, you'll see a massive run up in the last 1-2 years. But if you see the private banks, the leading private banks of India, HDFC, Kotak, ICICI, you'll see there's literally no run up in the last 2-3 years. In fact, these are the only options available in the market which are actually undervalued. And if you invest in this ETF, that basically means you're investing in top 10 private banks in India which are actually kind of undervalued. That basically means in the next 5 years, you can at least expect a CAGR of 20 to 25%. Plus, it is actually a very safe investment, really a very safe investment because you are investing in the biggest private banks of India. So you can do your research and you can consider investing in this ETF as well. Alright, this brings us to the end of the video and to the bonus ETF I promised in the beginning. And this is Mirai Asset NYSE FANG Plus ETF. Now, what makes this ETF so special that I have broken all my investing rules and invested so much money in this? See, the reason is AI revolution. I am a software engineer myself. I know the disruption AI is creating, and the top tech companies in the world are leading this innovation. When you invest in this ETF, you are basically investing in top 10 tech companies of the world, the most innovative companies, the FANG companies, Facebook, Apple, Google, Amazon, Netflix, Salesforce, all of these companies, they are leading this revolution, and I promise you in the next 5-10 years, you'll see a different world. And all the gains, literally all the gains of AI will be factored in by these companies, which basically means you can expect a CAGR of almost 30 to 40% I expect over the next 5-10 years if you invest in this ETF. And it is a super safe ETF because you're investing in the biggest tech companies of the world. Nothing is happening to these companies, and they are actually at a position where they can actually go 2x, 3x from where they are right now, which basically means if the other 3 ETFs do not help you reach your first or second crore, I promise you this ETF will definitely help you reach your third or fourth crore. This is not a recommendation from my side, but I have invested my own money in all of these ETFs, and if you also like them, do your own research, you can also consider investing in these ETFs. I hope you liked the video. If you did, please like it, please subscribe to the channel, and I'll see you next week with one more interesting investing video. Until then, keep investing in your dreams. Thank you.